Welcome back to Talk Tickers, where we break down the earnings calls that really move the markets. And wow, did DaVita's Q4 2025 report deliver? It sent the stock into a whole other gear. So let's get right into it, what happened, and more importantly, why. So let's just start with a headline number, a 16% jump in after-hours trading. I mean, wow. A move like that, it just doesn't happen out of the blue, right? You've got to ask yourself, what on earth did they say on that call to set off that kind of firework? All right, so let's dig in. It all starts with DaVita's decisive earnings beat. These are the numbers that really lit the fuse for the rally. And take a look at these numbers. It was just a clean sweep. Revenue came in at $3.62 billion. That's $120 million more than the consensus. And then the really impressive part, you look at the bottom line, adjusted EPS hit $3.40. That's a full 24 cents higher than Wall Street was penciling in. We're not talking about squeaking by here. These were absolutely solid, decisive beats. So to put that into perspective, that 340 EPS, it's a beat of more than 7.5%. In this kind of market, investors are looking for one thing, execution. And a beat this big, it just screams that management knows exactly what they're doing. It for sure got everyone's attention. Okay, so those Q4 numbers were great, right? But believe it or not, that wasn't even the main event. Nope. The real story, the thing that truly poured gasoline on the fire, was the guidance for 2026. This is where it gets really compelling. I mean, just look at this comparison. It's night and day. Management comes out and says, hey, we're looking at $13.60 to $15 for EPS in 2026. Meanwhile, the street was way back at around $12.65. This isn't just a little nudge up. The midpoint of their guidance is worlds away from the consensus. That's a huge signal of confidence from the team running the show. And it's not just talk. It's backed by cold, hard cash. $1.125 billion. That's the midpoint of their free cash flow guidance for 2026. When you're forecasting that you're going to generate over $1 billion in cash, well, it shows your operations are running like a well-oiled machine. And it gives them a ton of options, like buying back stock, which investors love to see. So, strong quarter, killer guidance. What else is there? Well, there's a really important strategic story playing out. We're talking about their pivot to integrated kidney care. This is all about DaVita proving they're not just running dialysis centers anymore. They're building the business of tomorrow. The way to think about it is kind of like a 3-layer cake. The foundation, that's their core business, in-center dialysis. They're great at it. But the next layer up, the real growth engine, is this integrated kidney care, or IKC. That's where they manage the patient's whole journey. And the icing on top? That's the future, pushing more and more into home-based care. And here's the kicker. This whole strategy, it's not just some idea on a PowerPoint slide anymore. It's actually making money. The CEO, Javier Rodriguez, said it himself on the call. IKC had its first profitable year, and they did it ahead of schedule. That is a massive proof point. It tells you the whole thing works, and it's a real business. And they're not stopping there. They're doubling down. They just announced a new partnership with a company called Alara Caring, and they're putting $200 million into it. The whole idea is to build out this home care model for kidney patients, really pushing into that future frontier we talked about. Okay, so let's put it all together. You've got the great results, the monster guidance, and the strategy is paying off. So how did all of that lead to that massive 16% stock surge? Let's decode it. And the reaction from the market? It was instantaneous. The stock closes at about $111. Then, boom, after the report, it spikes 16%. And it didn't even stop there. The next day, it kept running all the way up to over 136. This wasn't a slow drip. This was an explosion. Investors were re-evaluating this company in real time. So here's our core thesis on why this happened. The story around DaVita completely flipped. For the longest time, the big cloud hanging over the stock was all this worry about policy risk. Well, this call blew that cloud away and forced everyone, and I mean everyone, to focus on the company's raw earnings power. All right, so let's break that down. The big boogeyman for investors was this idea that certain ACA subsidies, basically government help for insurance, were going to expire. No one knew how bad the hit would be. It was this big, scary unknown. But what did management do? They came out and put a number on it. They said, look, it's about a $40 million headwind in 2026. And just like that, they took this huge, undefined fear and turned it into a small, manageable number that was already factored into their amazing guidance. Absolutely brilliant. So when you put it all together, you can see why the market went crazy. It wasn't just one thing. It was like a perfect storm. You had the huge Q4 beat. You had guidance that just crushed what anyone was thinking. They totally de-risked that policy headwind. Their big AI case strategy is now profitable, and the cash flow is looking fantastic. The market literally had no choice but to completely rethink what this company is worth. All right, so that's the why. Now for the what's next. Here's our take at Talk Tickers on what to look for, how the stock might act, and our official rating. Okay, so for Q1, let's be clear. Management already told us to expect a seasonally softer quarter. That's fine. What we'll be watching for is whether they hit those marks, just to prove that this new, higher baseline for earnings is for real. As for the stock price, look, the huge jump, that re-rating, has already happened. We think it'll probably trade sideways for a bit, consolidate these gains, and then start to grind higher as they keep delivering on this awesome guidance. So, putting it all together, we're giving DaVita an outperform rating. And of course, just a reminder, this is not financial advice.